नमस्कार, मैं हूं प्रकाश गाबा। मैंने टेक्निकल एनालिसिस शुरू कब किया था? अराउंड 2000 के करीब। आज है 2025। उस समय एक शख्स से मिला था, उनका नाम है रोहित श्रीवास्तव। वो उस समय काफ़ी सीनियर थे और मेरे सामने आज जो गेस्ट है वो है रोहित श्रीवास्तव। रोहित, आपका स्वागत है, वेलकम।
It's my complete pleasure to be sitting and having this conversation with you. In fact, you are our senior.
My age. But I remember we used to meet in the CNBC studios.
Yes, absolutely. We met there a couple of times,
Yeah.
especially in the early days. Yeah.
Early days.
Yes.
Tell me something about yourself, your journey, how you started, when you started your journey.
So I really got interested in stock markets way back, like 1990. So I would have been a teenager in college. And somehow I thought that this is a good place to build my career. You know, as a student of commerce, you really think, okay, what are you going to do? And I was pushed to look at the business pages. I got interested in what is this stocks thing.
Yeah.
And I started to, figure out how this works.
Okay.
And in that approach, I took an approach to study it on a complete basis. So I did not really start by looking at charts because most people know me for the charting history.
Yeah.
But I really started studying fundamentals, technicals, economics, everything.
Okay.
Because I felt that it is really important to understand the market as a whole. I can't really go and buy a particular stock without knowing what its business and background is. So I had a liking for accounting as a subject. I think that is also a reason why I did both technicals and fundamentals.
Okay.
Accounting was a alternate that we had like in ICSE, which I studied. From 9th itself, I had chosen accounting.
Okay.
So it really, the numbers, and I was good with numbers and maths, not with other type of subjects. So this, caught my attention. It was really intriguing of how you account, how you, build a balance sheet. And I think that just went on to become a very great place to study individual stocks.
Okay.
But then I also found an article about charting, 91, 92, I think around when the Gulf War was happening, and my dad had some old magazines of Fortune India. And I found some articles on technical analysis and I said, wow, now there is a science to this as well.
91, 92, that's been a good 7 or 8 years when I started.
Yes.
Okay. That's quite a long back.
Yes, quite a long back. I was in I think from 12th standard onwards, I got somewhat interested. I could spend a lot more time after that during BCom because you studied in the morning. College was like 6:50 in the morning till 10:30. And then what do you do the rest of the day?
Yes.
So I spent time in, building on this as initially a hobby, then a passion, and then it evolved into my career.
Okay.
And I got interested. So initially I learned technicals. There were no books in those days.
No books, yeah.
The only books I got was from Vision Books, which was one of the publishers that used to republish foreign books in India at very low prices, like a Martin Pring book at 150 rupees or 99 rupees. Yeah. So I was able to get hold of those books and get my initial grounding of the subject. And then much later, once I had done my MBA, I got interested in Elliott wave analysis.
You were known as an Elliott wave guy.
Yeah. So I got interested in Elliott wave around after completing my MBA.
Okay.
And partly because by then I had studied a lot of technicals, but a lot of the mistakes that I made, which is probably the 90s was all full of mistakes. I found that even though I had come up with this trade setup, combining averages, Bollinger Bands and so on, the same trade setup did not work every time. So I was really looking for the answer as to how I could go about that. Now, I didn't have the answer. I thought the setup was good enough for me to, find a couple of good trades. If one goes wrong, it doesn't really matter. There's always going to be one that goes wrong.
Yeah.
But when I was passing out my MBA, I actually got interviewed by somebody who was an Elliott wave analyst.
Wow.
And he wanted to only hire somebody who knew Elliott waves. And that was my setback. I thought if with my knowledge, anybody would, really take me on. And he said no, just for that one reason. So I went on and found a job for myself on a trading desk, with a proprietary desk.
Okay.
And the first thing I did is I called my brother in the US. I said, send me a book on Elliott waves.
Okay.
I must know this. I cannot be called out for not knowing something.
Okay.
And so then I finally approached it. And a lot of people approach Elliott wave with skepticism because it is a forecasting tool.
Yes.
And I had that mindset too, because initially I'd heard about it and I thought that, no, you can't predict, markets move in trends, but you can't predict. So I said, if I do that, I'll not learn this subject.
Yeah.
So I said, let me open it, let me apply what is written in practice, and then actually do it in my everyday work. So the work I was doing at this desk was also, I was writing a write-up which was going to all the management every week. So on a Saturday, I would sit down, scan the charts and write it. That write-up, its accuracy and its detailing improved significantly after I started using Elliott wave analysis. And that is when the feedback would come that, yeah, you wrote this and this is what happened. You wrote this is what happened, these levels it turned from. And I said, okay, now I'm getting somewhere.
When was this approximately?
So this is all in 1999, around the
1999?
Yes.
Okay.
Y2K bubble building is when I was learning.
That's where I started actually.
Right.
Yeah, similar time. Very good. Thereafter what?
So Y2K was the point where Elliott waves became part of my entire toolkit.
Okay.
And then of course you had the Y2K bear market, and then FNO got introduced, and now you had FNO data.
Yeah.
So I had also started plotting a couple of classic indicators. One is of course the breadth, advance and decline. So I've been plotting those since 1994 manually on graph charts.
Achha, manually?
Yeah, because
we started the same.
There was no computer software till I came across Metastock.
Yeah.
And
which was it? Version 6?
So I was using the version, I don't remember the version.
Version 6 I started with.
In fact, I started using Metastock's DOS version way back in 1994 when I joined the Wall Street Journal as one of my first jobs.
Okay.
And they were the distributors. So I got to use that. And of course, later it's progressed to the online version, but I continue to use Metastock even today.
Very good. Excellent. I love Metastock, I must tell you this. I've stopped using it though, but it's an amazing software tool. Tell me then.
So my career, I think, really took off with joining Sharekhan. I had spent 10 years learning wave analysis, learning technicals, understanding somewhat how fundamentals should fit into this whole thing. And I think wave analysis was sort of even the connector of the dots between fundamentals and the market, technicals and the market. It sort of connected everything for me.
Okay.
In fact, even economics, because it is a behavioral study.
Yeah.
So its forecasting is based on behavioral patterns where what the mass and crowd is thinking and doing really comes into picture.
Okay.
And that's when we developed another set of indicators, a lot of which comes from market data, is what we call as sentiment indicators.
Yes.
So sentiment indicators, whether it is breadth, whether it's put call ratios, which became available after FNO got introduced in 2001, participant data, which is basically positioning of all the participants, the swing which we measure on our own RMI indicator, and various diffusion indicators, with the percentage of stocks which are above the 200-day average and so on. This entire set of sentiment plays a very big role in identifying the turning points of the waves as well.
Absolutely.
So sentiment became, I think, key because behavior is the center of everything. And so even if we are looking at macro data, it's again behavior is getting combined. If I'm looking at fundamentals, when a stock goes from valuation to growth to overvalued, that entire cycle is again sentiment. So people get excessively pessimistic, valuations are low, matches with the waves at the bottom.
Yes.
And so I think everything just fell together, in the form of a science. And I was able to apply that at Sharekhan over a period of time in various reports and all the calls that we made over there. And I think that's where the recognition of what I was doing started to happen.
So you were basically known as an Elliott wave expert. Yes. I remember that.
Yes, that is true. That is very, very, very true, because when you're there and you're trying to make a big call, you're trying to say, oh, the market's going to shoot up by so much. And wave analysis plays a role in making forecasts. So therefore, that did become one of the things I was associated with, that, Elliott wave analysis, Rohit Srivastava, the name got linked to that more than anything else.
Correct. I also remember you were also teaching in Sharekhan. When did you join Sharekhan, and you were teaching in Sharekhan also?
Not really. Sharekhan did have a teaching program which they signed up with various partners, and they do have an education entire business now.
Okay.
But no, I did not get associated into that, because somewhere I thought that I should do something which is directly associated with clients in terms of helping them make money. So it went from giving calls to managing money. So I shifted into portfolio management services in 2005 and tried to develop long short funds within the PMS space, because that was the only place I saw room to play around with some kind of futures, and which nobody had done in PMS. Futures is hardly heard of.
That was via media actually.
Yeah, because we didn't have what you have today. Now you have various structures available, alternative
investment funds,
investment funds, the AIFs. That was not there back then. So it was my attempt to try and do it within the guidelines of PMS. We launched a managed futures kind of fund.
Okay.
And that's what I did for after 2005.
It was a good combination of long and short in futures.
Yes.
It could be done.
Yes.
Technically and legally.
Yes.
Very nice. Now tell me, when did you leave Sharekhan? One, and what made you have your own software? Can you tell me something about your software? Before you explain to me something about your software. What inspired you to make a software?
So it's the inspiration came from the journey itself. So I think I should explain why we left. I think we the company went through various rounds of changing hands. Now it's part of Mire, and as those change of hands were happening, I was really wondering what is my role next, and in not being able to figure that out, I said, let me go on and do something on my own where I share my opinions with the world. That is one. So that sort of led to content. And then I said, people need to upgrade their understanding and knowledge. So let us teach them. So we started an extensive mentorship program, which, goes on for 2-3 months, where they learn. No one-day programs, total learning. And then we handhold them through, annual offsite meets and so on. So they actually will spend a year or two before they grasp the entire subject and achieve proficiency. Now, as we kept doing that, I found that the tools that I was using, like I mentioned, sentiment indicators, scanning of stocks, all those things which I was doing, those were not available.
Okay.
I'm running it on Metastock. Everybody doesn't want to buy Metastock. So how do I make these things available to these people?
Yeah. Okay.
That was the challenge. And I said, then let's develop a product of our own where they are able to access these tools and become self-driven investors or traders, which means they do their own research and take their own calls of what to buy and sell. Because eventually, what I found in working with broking is people depend on somebody else for a call, but they don't follow that 100%. You would have experienced that also.
Absolutely.
That you may give 10 calls, you can say I was right 6 times or 7 times. He will follow you 50% of the time. So I said that means your probability of being right is 0.6 into 0.5, which is only 0.3.
Yeah.
So he takes away nothing at the end of the day.
Correct.
The only way he will take away something is if he does it himself. And he needs to have the tools to do it. So Strike was which is the software that we really developed, was an outcome of that let's put all the tools and all the thought processes that we have in investing or trading into an application and make it very, very simple. It should not be difficult and complex like some of the high-end packages which institutions use, where you need to know some language, some coding. It should be click a button, get a result, click a button here, get a result. And it should be like a trader terminal. And that's how it evolved in terms of the UI UX interface. That everything is on the same screen. You can put it up. You can put multiple terminals. If you have 4 screens, you can spread it out. Different screens you can have, and click and get results on each screen and have it live running. I mean, this is the imagination with which we developed Strike.
When was that?
So the Strike development started in 2022. At the end, I would say December 2022. So a large part of 23 went into development, and by September we did a soft launch, which means people could use it for free for the first 3 months. And then from January it became a subscription-based model where people subscribe at a very nominal fee of say 650 a month, and then they continue.
That's not much really.
Yeah, not much given the amount of data we have put into it. Everything from derivatives, F&O, cash market, fundamentals. And we will add in future as time goes, even Forex and commodities. We'll just keep expanding the universe. But right now we are focused on the equity segment. Want to, complete that and then move on to other segments, over time.
Okay. So you put all your tools, learning tools into that one package.
Yes. All the tools, everything that people will want to do from my perspective, and also whatever they want to do. So people may imagine that, I want to do this way. I want to search or scan it in a particular way. It should be possible. So based on the continuous feedback we get from users, the software itself is evolving.
Very good. Amazing. Would you like to show it to me?
Yes,
definitely. And to the viewers of the channel.
Absolutely. So they should get an insight into what it looks like and what they can do.
I'm keen, very curious. Absolutely.
Let's get started. Yes.
Okay. Now explain to me.
So what you're looking at is the dashboard. Anybody who visits web.strike.money ends up, seeing this particular dashboard, which allows them to, look at some of the basic features But once he subscribes, then he can look at some of the more advanced features. Now, you do get a 7-day trial, so anybody can start off on looking at each of these features. But we'll have an offer for everybody who's watching. Okay. But let's understand it first, before we offer anything else. So one of the first things here on the left is, of course, the market watch. This is the simplest thing that people want. And in a market watch, they have the option of either looking at stocks from various sectors,
okay,
with the charts on the right hand side, or creating their own custom watch lists where certain watch lists can be picked up, which they make on their own.
Perfect.
So the advantage of watch lists is that as and when I feel that I like a certain stock, or if I've scanned something in one of my tools, I can save it to a particular watch list and continue to track them.
Okay.
Or even do multiple scans on a watch list. So that's the advantage. This is, of course, one of the free tools on the software.
Okay.
But as we go deeper, I'll take you to one of the most interesting features that I find and I have to use every day. Okay, so this is the number one thing for everybody. And these are what we call as sentiment indicators. Now, the reason we call them sentiment indicators, as we discussed before, is that it sort of tells you whether everybody is bullish or everybody is bearish.
Okay.
Okay, and this can be done by looking at the FNO data, the breadth data, or the momentum data, all different kinds of data feed which is coming in. We can sort of study to know if everything is in a particular direction, then it's possibly going to change.
Okay.
One of the most powerful tools I've created over here for the short term is something known as the swing.
Okay.
Okay, the swing captures the direction of the momentum, whether it plots it in the form of a percentage.
Okay.
From 0 to 100, what percentage of stocks are really showing positive momentum.
Okay.
And this is very useful in picking near-term tops and bottoms, in the market. Okay. Sometimes these tops and bottoms last for a few days. Sometimes they last for several days. But it's a good point where very short-term traders who have that time frame can either enter or exit what they are really doing. So we'll take an example.
Just one question here.
Yeah.
Will it be for a few days straight?
It can be longer, but we should keep it in mind that keep a 2-day time frame to start with, 2-3 day time frame.
Okay. And can go up to 8, 10 days.
But it can go up for
longer. Good for a swing trade, absolutely.
It can be good.
Wow, very good.
Trade. Yeah.
Can you show us that?
Yes. So I'll show you recent examples, then we look at some past examples as well. Now, in the recent examples, what we really see here is, for example, the most recent bottom when the tariffs were announced. Okay, so that's back here. The swing on this day has fallen to a very low reading, almost single digits. Okay, so almost around say 5% or 3%. Now 3% means that 97% of the stocks on that day are showing negative momentum.
Okay,
and if it's that extreme, then possibly it's going to bounce back. It's going to turn. Now people may say, okay, yeah, that was a big news event. What about the others? So we move a little ahead here. And we find something similar happening around the war, right? Where we had the India and Pakistan, skirmishes, and prices were down. On that Friday, the reading had actually dropped to a low level of again single digits, well below 10%.
Oh,
and that was an indicator that the market is getting near-term oversold. Okay. Now these are events. People can again say, okay, but what about every other occasion? So we go a little back. Okay, and note I'm only looking at right now the bullish situations where markets may have made lows, and the reason I'm doing that is when we are in a bull market, you essentially want to be buying. You don't want to be shorting every time. If you're in a bearish situation, then you want to be shorting. So we can use this tool to go both ways, but I am choosing a bullish phase just to show people that every low point in the indicator where it is down here below these red lines. So you put red lines here at 20 and 10 at the bottom.
Okay.
And 80 and 90 at the top, just to tell the extremes.
Yeah, okay.
So when you reach these red lines, when you reach these extremes, and then you see whenever it's reached these red lines, where is the market and what has it done subsequent to that? It's actually gone right back.
It's going up.
So each of these occasions has worked pretty well.
This is irrespective of what the news is.
Irrespective of what the news is. If the news brought it down, doesn't matter. Even better. Even whether it was election. So this is election day. On this day, intraday, the number had dropped to almost 3.
Okay.
End of the day, it closed at around 6 or 7. So when it dropped to 3, that's like extreme number, and we would like to buy there.
So this works. I like to ask you, since this works on buying, this also works on selling?
Yes, if the market is in a downtrend, then of course we would say that. So let's take 2024-25. The market was in a long duration downtrend. Every time we had readings of around 70,
Okay.
or 80 or 90. High readings, basically, I would say 80 and 90. All the readings above the red line is what I'm marking over here. And then we look at what did the market do at each of these points.
Yeah, interesting.
So each of these points, starting from here, this is a bounce in a downtrend, ended right here where the reading reached at that level. This reached at this level. Okay. Now see, this is a shorter. So where I say that time is unknown, either here you got a slightly longer swing, but here it was just a couple of days.
Yeah.
Very small dip. So that's something that we don't necessarily know whether it's going to be small or big. You can do a trailing stop loss and try to capture that. But we do know that you will get a turn.
Yeah, we do know that when we are extreme, the turn will come. It's
Yes.
a matter of time.
It's a matter of time.
Fine, very good. So this is daily swing in okay. Very good. Excellent.
Of course, the direction of the market is important because you don't want to try shorting a rising market. Now, if you get a very high swing reading in a rising market, all it might do is the market might stop rising for 2-3 days. It might not fall.
Just do a time correction.
Just do a time correction. Now, time corrections are important to option traders.
Yeah.
So, I don't say everything is unimportant.
Yeah.
This data point, if you're a bull and you've bought call options and you reached a 90 reading, the next 3 days it's not going to do anything. Maybe it's a good time to book your calls. You'll lose money, you'll lose time value. So, book your call options. So, in that way, it's very useful even in a bullish trend. But I wouldn't short a 90 reading. That's the main point I wanted to make.
But I'll book profit.
But I'll book profit in options and I get a high reading.
That's where your years of experience comes into play.
Yes, absolutely.
Now,
this is for short term, guys. So you in a year you can get multiple, as you see, multiple readings to get in or get out based on the swing. But what if you have a slightly more medium term view? What if you want to know is everybody bullish or bearish in the medium term? So then we have to go a step out and look at different types of data points.
When you say medium term, what is the time frame you're looking?
So we can first go to looking at say 1 to 2 months, and then we can look at 3 to 6 months, and we can have both different times.
That'll be very interesting.
Okay, so if I'm really looking at 1 to 2 months, I will go to derivative data and look at something known as the open interest based put call ratio.
Okay.
Now the YPCR. Okay, PCR is of two types. A lot of people don't know this. There's the volume of trading in puts and calls, and then there's the actual open interest at the end of the day.
Yeah.
The volume is a different type of sentiment. It shows whether people are excessively bearish, so they're trading a lot of puts. But the open interest is more from the writer side. Okay, if the market is falling and the writers feel, yes, it's bearish, they will sell more call options. The calls will be large in quantity. Okay. So automatically the OI-PCR is going to fall.
Okay.
And when it keeps falling and reaches an oversold zone, which means that the writers also reach a point where they've sold so many calls, they can't sell anymore.
Correct.
That is where it is going to bottom.
Okay.
So when we are looking at the open interest based put call ratio, we are trying to just judge when does it get excessively pessimistic. When have people sold too many calls? Now on the opposite side, people can say how many people have bought too many calls.
Yeah.
It's happened here. It's happening here right now. Just around this point.
Bought too many calls.
Yeah.
Okay.
Bought and sold both. So the writers sold too much because they thought the market's falling. So there's a huge open interest in calls. And that huge open interest, when it reaches this lower red line, okay, and we set these red lines based on recent data. If the ranges change, then we will automatically reset it.
It's automatic.
Yeah.
Okay.
So all these points which are at the red lines, when we actually mark it and we see where the market was, it ends up being at various bottoms. Now these bottoms are slightly more, I'll not say medium term. I'll say 3 to 4 weeks kind of time frame.
Not 3 to 4 is really a month.
Yeah.
Very good.
Yeah. It's
you can get good moves.
Yeah, good positional moves in the market.
Absolutely good. Amazing. I can see that. Yeah. But this again works on daily?
So this is all daily charts.
Yeah. Have you worked this on weekly charts?
Not really, because it's not going to change much. It's the same because it's the daily data we are plotting.
Okay.
Okay, so it's going to have the same range. By making it weekly, I don't think it's not like momentum, which is different on weekly or daily. It's the daily data.
Because you're using put call ratio for the 3 months.
Yeah.
Okay.
So we keep the daily data and then we just run an average on it.
Perfect.
So this is as it says here, it's a 9 EMA. So it's a 9-day moving average of the put call ratio. So you get a very smooth version. Now, if you look at the raw data, you will see it jumping up and down. People will not understand what it is doing.
Smoothens out.
It's a smooth version.
What else can you show?
Okay. Now, we will go slightly out in time. Okay, so
Okay.
I'm going to go to FIIs, right? People always want to know whether FIIs are long or short.
Okay.
Okay, does that tell us anything about the market? The answer is only when it is at an extreme. Again, the same concept remains the same. We have to look at not when FIIs are going long or short, but when they have the highest short position compared to previous history.
Okay. Okay.
So when they reach that point, most probably it is going to be near a bottom.
Yeah.
This surprises people because people think that FIs are the smartest, so they should be long at the bottom and short at the top. But this is not a question of smartness. It's really about how they are hedging or what they are doing. We don't want to judge what they are doing. We just want to know if everybody is what, bullish or bearish. This is an expression of their position.
Yeah. Okay.
Right. So position expresses their view on the market.
Done.
So if all FIs are bearish, probably the market can't fall anymore.
Yes.
Which means that they have the maximum short position based on history.
They need to be squeezed out.
They will get squeezed out. This is what the data is showing us, and we can see it visually on this chart. So,
Yes.
so this data started to become available since 2012. NSE has been giving it to us.
Okay.
And I'm just taking the 2023 period to highlight that all the readings down here, when there were shorts of almost extreme readings of almost 1 lakh contracts, all these readings down here, they all been associated with market bottoms that lasted for several months.
An amazing indicator.
So we should not look at just the day-to-day FIA position. They bought some futures, sold some futures. You need to look at where the position is compared to history. And that is where the chart really helps people. And this is where it becomes slightly medium term and positional in nature. More positional. In fact, investors who have a 3 month, 6 month kind of time horizon would use these to invest or exit. Now, this also works on the opposite side. When FI is excessively long,
it comes down, yeah.
Okay. Sometimes it's a temporary pause. Sorry.
But it is coming down. And I see some massive moves out here.
Yeah.
There have been 3 here, somewhere in March, then November, and then again in June.
Yes.
And all the 3 times it's gone up amazingly.
Amazingly gone up. So in a bullish phase, it picked all of that. It would have done that even before. I'm just showing this period. Even if we go way back here, it's the same thing. 15,200 Nifty in 22. Or I go back to COVID, I'll have the same kind of reading. Now let's be current. So what happened currently? Sometimes data does go outside the ranges, and it's actually happened in the last 1 year where FIs did go excessively long, going into the highs of July and then finally September all the way here. At this peak, they had the highest long position in history. They've never been this long in index futures.
Diversion out. I see a diversion there.
Yes. Yes, you're right. That's a divergence there. And that got followed by a sell-off.
Yeah.
But in the sell-off, they also went excessively short.
Yeah. And again, up move started.
Again, an up move started. And this is
amazing.
The highest short position they've had in history.
This gives you a general view, the confidence behind your move. ये तो ऊपर है मैं छोड़ूंगा, short नहीं करूंगा. That kind of feeling?
Absolutely.
ये तो short है मैं buy नहीं करूंगा. That kind of feeling?
Absolutely. That should be the thought. I mean, if people are not thinking that way, then it's wrong.
It's a backbone.
Yeah.
It gives you some kind of saying, my grandfather is behind me, I'm okay.
Yes. You should get confidence. When you see this kind of data.
Amazing indicator. FI net index futures position. Amazing indicator, I must tell you this. I remember we used to do it earlier, broad-based indicator, but you made it so easy.
And I can also go a little more longer term if I look at domestic institutions.
Okay.
Now, same thing, same data point for domestic institutions. Now, domestic institutions, unlike FIs, don't go quickly long and short.
Okay.
They do it like once in 2 years, they will be excessively long or excessively short. So, a longer term investor gets a very good point of entry.
How reliable is this domestic investor? I mean, do we follow the domestic, do we follow the domestic investors or the FIs?
So, both will give you different data points.
Yeah.
Say, like for example, we just saw in the FII data point that they helped us capture this bottom.
Yeah.
They helped us capture this bottom. They helped us capture this bottom. But domestic institutions are bullish only, like I said, at certain points when it is really extreme, not at all points. So, back here in March of 2023, the domestic institutions went all in long.
Okay.
At this point, they were saying now bahut ho gaya.
Okay.
After that, there was nothing great in between in the data. They were slightly short over here into the top. So, they reached these red lines. Okay, so they did get a slight short position here. So this was an important point. And now, most recently, when we've had all this panic in the market, they have been holding on to the largest long position in the history of domestic institutions so far.
Very good.
Okay, so that is the level of confidence. Now, if I say who's confident about Story India in March of 2025, the answer is domestic institutions, outright by this position.
Absolutely, shows it very clearly.
I don't need to see what is their cash level of the mutual fund and all that. This is their view expressed in the index futures.
Actually, if you see, we give too much of importance to FI, but they're usually wrong.
So let's not say they are wrong or right, because we only want to know. We only want to know the combined sentiment of the FIs, because they may have a hedging position. Underlying, they have cash.
Okay.
So maybe they're not wrong. They are just hedging a lot because they got scared. We only want to know that, yes, are they scared enough?
But when you look at the data alone, FISK, we know where to enter.
Yeah, that is true.
Let's so far, guys, what जो करना है, लेकिन मुझे तो यहाँ पैसा मिलेगा. उनका extreme हो गया. We can say like that.
Yes, that is, at least it's turned out to be
true in the indicators.
Yes,
and that's good enough reason for me to buy those kind of things. Very good, excellent.
So even as we record, for people who may see this soon, the DIs here, they had cut their entire long position, but here, and this is just before the RBI policy, where the market has dipped. Domestic institutions went right back long at the beginning of this month.
Yeah, amazing.
So very good feeling. So when would we maybe negative? We can very well wait maybe a year or so till the DIs really become short and negative on the market. Till that point of time, why do I need to worry if I'm looking at something like
as long as we are positive, we are up, good enough.
Yes.
Very good. Tell me something more.
Now I can look at the same thing with one more data point, which is very interesting, and then we'll go to different types of data outside of sentiment. The volume-based put call ratio. I explained this some time back that people only look at open interest.
Yeah.
But when we look at the volume of puts traded, it's actually a long-term indicator and not a short-term indicator, and I'll show you how.
Okay.
It doesn't reach its extremes sometimes in years.
Okay.
And when it does that, then we get some very interesting points. Now, we can get some nearer term points, but I'll try to show it as a long-term tool. Okay, now I'm really going a little back in time so that it becomes understood. What happens is the volume of puts traded really increases significantly when the markets are falling. So this is a period where the volume of puts is increasing and the market is down for almost a 12-month period. And when it's there, the reading is closer to around 0.7, 0.8 or 0.9. In the raw data, it even goes to 0.9. This is a 14-day average that we've really plotted.
Okay.
And similarly, when the market goes up and it keeps going up for an entire time period, this data will eventually drop to a low reading of almost 0.4 at the bottom end. Okay. So these readings down here are indicative that, okay, some kind of a top is taking place, which might last for a while. In this case, it's lasted for an entire year.
Yeah, okay. Good.
Now, so what was it telling us around COVID?
Okay.
So this is the 2018 top, and this is COVID. For those who remember, 2018 over here is where the mid-cap, small-cap indices all topped out. The Nifty did eventually make higher highs, but not the broad market. So the broad market actually peaked here when there was maximum optimism.
Too much of pain.
Yeah, too much. So that was a good point to start unloading.
Okay.
On the opposite side, when the data has reached up here, and this is the COVID point, very few calls are being traded, which means a lot of puts are being traded, and that sort of marks the extreme pessimism.
Okay. Good.
Again, this comes right back to a 0.4 reading here at the October of 21-22. Now, what I found interesting in this data, and this is very unusual to me, we are also trying to figure it out, is since 2022-23, it has been elevated. Up here. It is not coming down even though the market's going up. That means throughout this phase, people have been excessively pessimistic.
They've been pessimistic.
They've been pessimistic for an entire 2-year period. For whatever the reason, whether it's starting with Ukraine war to the tariffs for this period, somehow
uneasiness.
Uneasiness is what the volume of options traded is showing. Because if it was optimism, then a lot more calls would be traded and we should be at a 0.4 ratio. It's not reached. So when it comes to saying that the long-term bull market is over or we are at an important top, this doesn't show we are there yet.
Okay. Very good. Very interesting. These sentiments are amazing.
So Prakash, what we've really looked at now is one of the first things that I feel we have to do when we approach the market. That is decide whether the market is going up or down.
Yes.
All these sentiment indicators are telling us whether the market is at a top or a bottom.
Yeah.
Now, once you've decided that the market is at a top or a bottom, then the next question comes in, if you're not trading Nifty, that is, what stocks do I buy?
Yes, correct. Absolutely.
And the immediate progression, therefore, then is, okay, then how can I find that? How can I find the best stocks that are fitting some kind of a model to enter? And that is the next step that we will really go to. The sentiment indicator should help us first catch the highs and lows, know, okay, this is the direction that we're going to head in.
Okay.
And then we go to the next step, which is finding stocks. So let's try and do that.
Yeah. So it's simply saying that is the trend up? First find the direction of the trend.
First find the direction, and then choose whether you want to be. Because if the direction is down, a bearish investor will not want to buy.
Yes.
A bearish trader might want to short on the swing, and so on and so forth. Then he can build his theory according to that.
Great.
But now that we've decided what the direction is, let's look at how do we find stocks. Now to do that, there are many different ways, but one of the ways that we've developed is using our own proprietary momentum indicator. And we go to scanners. Okay, so there's a scanning section, and within that I have something interesting called the RMI scanner. The RMI is basically the Rohit momentum indicator. You see it on
there for a long time.
Yeah, I developed this even before I did Elliott wave theory.
Yes.
In the 90s, 95, 96, I was like, I need an indicator which is better, which can get the direction right and which is better.
Yeah.
And I kept evolving and found something that I thought would be useful.
Please.
So, we've been using it. So, it's been tried and tested. I'm using it. My teams have.
I know you've been using it for many years. It's a famous indicator.
It was just not in public space. Yeah. Now with the tool, it's in public space. And it shows up on the right hand side. So when we have the scanner on the right hand side, we have two charts. One is the indicator itself, and then we have the chart of the stock which may be shown. But let's understand what we can do here. We want to find the stocks that we want to buy, not all the stocks.
Okay.
Now if I choose so I'm choosing here the FNO basket. The reason I'm choosing FNO is I can find longs or shorts depending on the market situation. Now, within that also, I need to choose the time frame that I want to be in. So if I want to be in a very short-term time frame, like a few days, then I might want to do combination of hourly and daily.
Okay.
If I want a slightly medium-term positional trade, I might want to combine the daily and weekly. Okay. So this multi-time frame scan allows you to do any kind of combination you want.
Okay.
You can do multiple time frames also, daily, hourly, quarterly, or daily, hourly, monthly.
Monthly.
Something like that. But let's just see how we can do a two time frame combination. So the first thing I've done is chosen a basket, that's the FNO.
Okay.
Then I've chosen something here known as live. There's also an option called last candle close.
Okay.
The reason is that last candle close means I want to know the signals that have come till yesterday's closing prices.
Okay.
But when you're in a live market, like it's running today, I want to know where may be the possible buy signals coming for today.
Yeah, okay.
So you can preempt it.
Absolutely.
So on a daily chart, if a buy signal is coming at 3:30, I can know in advance that yes, this might come today.
Yeah.
And I can check at 3:30, is it still there?
Yeah.
So then I keep it in live mode.
Okay.
If it's an hourly mode, every hour I can check for a live signal coming on. So for people who want to take live trades, so this is something that I do.
Yes.
Okay. What I do is I execute all my trades between 3:15 and 3:30.
Okay.
I don't say that agar aaj buy signal aaya hai, I will buy it tomorrow morning.
Aaj hi karunga.
I will buy it today only. Because overnight gaps, as you also will know, overnight gaps take away 80% of the returns.
Yeah.
This has been back tested, in theory, and we've all seen it. And therefore, why should I give up those, 80% returns also?
Correct.
So I found that buying on the same day is the most useful, and therefore I act on it.
Okay.
So that is why we created a live mode.
Yeah.
So in the live mode, what I can see here is that there are various stocks that may be giving signals. Now, if I actually choose all, if it's in an all mode, so this is the scanning that can be done. It shows me the entire FNO list, which with hourly, daily, weekly. What is the status of the RMI on all 4 time frames?
Okay.
So it may be a sell on the hourly, but it may be a sell on the monthly also, but it's a buy on the weekly.
Okay.
So this is a combination.
Okay.
But I might want to look for a particular combination. Say, for example, I would say I want positional trades, which last for say 1.5 month or so.
Okay.
Then I would say look for stocks that have a bullish trend on the weekly chart.
Okay.
But are giving me a buy signal, a new buy signal on the daily chart.
Daily chart.
So here is an entire list.
That's a live one.
Yeah, this is in live mode now because we are recording right now. This would be as per the closing that has already happened.
Yeah.
But if it was live market, it will show me what is happening today.
During the day, it will show you
During the
anytime. But you would prefer to do it between 3 and 3:30.
I prefer to look at it. But like 3 and 3:30 is when I'll execute. I can of course do the analysis beforehand.
And keep it ready for it.
Keep it ready. So 2:30 also I can see live mode में what is coming as buy. And then I'm
If you
prepared.
say a buy, you might take it trade.
You might take the trade.
Okay.
Because some days, like this is a unique day where the whole market rallied by 2%.
Yeah.
So a lot of new buy signals ended up coming together.
Yeah.
Every day is not like this. Sometimes there are only 2 or 3
Okay.
which show up. So when there are 2 or 3, you have to only choose between those 3.
Only 3.
So when the list is a little bigger like this, then I might have to choose between them. So I might have to actually look at each setup on the chart
Okay.
and decide, okay, I like this more because it's maybe down or because or whatever I see, maybe on a different time frame. And so I can decide what I want on, what I like based on now this has gone up a lot and it's giving a buy signal here on the RMI. I might not want it. I want those signals which are coming from the
Is also
zero
giving
line.
a buy signal in the lower regions? Yes. What a massive move it is.
Yeah.
Massive move.
Yeah. So I usually like the buy signals that come from near the zero line.
Lines. Yeah.
So that means that it's already been through a down cycle and it's
So
just
look,
starting.
below 700.
Yes.
Now 880.
That's
It's
right.
around 180 rupees move. Very good.
So this is super. So here now when you're buying, if you buy on this buy signal, then you end up buying too far up.
Yeah.
So it to me this buy signal doesn't make sense. The buy signal that will make sense is the one that is just starting out.
Beautiful. Below zero line.
Yeah. So that's where if I have a large list, I will need to do a little bit of scanning.
Yeah.
But like I said, this doesn't happen every day. And if I change the basket, say for example, we only choose Nifty 50, you might end up getting
Fewer stocks.
very few stocks.
Good enough.
Only 2.
Which are the 2 stocks? Yeah. M&M and Trent.
Yes.
Very good.
So it improves my work, limits how much I need to do.
Yeah.
I'm down to just 2 stocks out of 50.
Yeah.
Or out of 250 of FNO stocks, maybe I'm down to just 20.
Yeah.
Sometimes there also I might just come down to 2, 3. And that's all. Decision making is fast.
It's an amazing indicator actually.
Yeah, so the great part is being able to do the multi-time frame analysis. So one stage is having an indicator and then being able to combine different time frames. Because what we say in trading, as you would also, tell people is that you always take the trend on a higher time frame.
Yeah.
And then you take the trades on a lower time frame.
I
So
do
that
it
is
all the
the-
time. I'm a firm believer in multi-time frame.
So the simplest thing, and I have to be able to do it. So this is a quick way
Very quick.
of scanning something like that. Otherwise, I would have to go to the Explorer on Metastock, run one cycle,
Yeah.
then get the output, then run on that output again.
Yes.
And here I'm able to,
3 times I would have to run, but this does it
it
instantly.
does it instantly. So that's what we try to put it together. And it allows multiple combinations. I mean, you can even have a third layer. You can say, I want only those which are in monthly something.
Okay.
And so it sometimes happens that, market is falling. Now it gets oversold. At that time, monthly is not going to be in buy. So you are going to look only for those stocks where monthly is in sell, but weekly or daily may be changing. Weekly also might not be yet in buy. So you can come up with an odd combination which fits that particular moment in the market. And that is why combining actually will be helpful in getting those kind of odd combinations.
I think this is very beautiful because I personally use multiple time frame and this makes it very easy at a click of a button.
Great.
I must tell you this. Amazing. Congratulations. Good indicator. Scanner.
Yeah. So so here we have now done one job of scanning stocks.
Okay.
There are many things we can do with the tool, but what I'd really want to go to next, looking at it from an investor's point of view.
Okay.
Okay, he just doesn't want to see the long-term RMI cycle, but he might also want to see where are we on the fundamental cycle.
Oh.
Okay, and I have started to call all the valuation metrics
Okay.
as sentiment indicators.
All the valuation metrics are sentiment indicators. Okay.
Because a fund manager once used this one-liner when he was with me at Sharekhan. He said, P ratio is nothing but the perception of earnings.
Okay.
That one-liner has stuck with me. Okay. And a moment you say it's perception of earnings, we are saying that it is the sentiment. It is our belief that earnings are going to grow, so we are giving a higher P ratio.
Okay.
It is our belief that the earnings are not growing, so we are giving a lower P ratio. So that when P ratios are very low, it means everybody is pessimistic about the stock.
Correct.
So is it the lowest in history?
Okay.
So in statistical terms, you would say, is it at 2 standard deviations down in terms of valuations?
Okay.
So the next thing we'll do
It
is,
means really cheap.
that means really cheap.
Okay.
And that's when you want to look at it, then when nobody's interested. For example, in the last 4 months, as we are talking, we know that financial stocks have done very well.
Okay.
Few people would have realized that valuations for the financial sector were at less than -1 standard deviation and slightly near or above -2 standard deviations.
Okay.
Why did this happen?
Okay.
It happened because earnings were growing for the sector, but money was going somewhere else.
Somewhere else. Okay.
It was going into green energy, it was going into defense. And so on. And we ignored the financial sector for 2 years. The valuations kept coming down and reached the lowest level.
Yes.
People were ignoring that.
Yeah.
But in the midst of negativity in Jan, domestic funds started to buy these low valued stocks. And all of a sudden, the 3-month return in financial stocks, NBFCs, private banks, has been one of the best on record. So, and that's what we'll now get to. Let's look at.
Would you like to call it Techno-fundamental?
Yes, it is Techno-fundamental. It's absolutely Techno-fundamental. Okay. So we are combining the RMI cycle along with the valuation cycle to be able to see whether the stock is ready to move.
It's an extreme in valuation and you're getting a buy signal on RMI.
Yes.
What more you could
What
ask
more
for?
could you ask for?
Absolutely. Show to me. I'm interested.
Okay. So let's start with some financial stock over here. Okay. We could take, and let me tell people, this is not a recommendation. We are just trying to.
Yes.
Because the moment I open a stock.
Consult your financial advisor.
Absolutely. We're just showing you how to use this.
Yeah.
Shriram Finance, I'm trying to get at. Yeah. Okay. Now, the reason to choose this is essentially I've already seen the chart and I have a fair idea of how its valuations have moved over time. Now, when we open the valuation chart, now this is a standalone valuation chart without the momentum on top of it. We can choose any time frame, whether you want 1 year, 3 year, 5 year. I often like max. Some people like shorter time frames. Okay. I like max because I can see the entire behavior here from 2010 onwards for the entire bull bear markets that have happened. In fact, if you want a longer history, I can do standalone and I'm getting the history from 2002.
Okay.
So the last bull market, where did we go? Then where are we now?
Okay.
And this is where we are. And in the interim here, like I was saying, valuations were at the bottom, still at the bottom end of the range. And we've really not gone anywhere.
No.
The reason for this is essentially, ignorance of the market. If there was growth in between, maybe there was a pause in growth. Any reason could be there. But we've reached the, lower end. And that is where then you want to start seeing why you're there. Now, the next step is people may say, okay, let's combine this with momentum. So then we go to the charts and we choose what is known as the strike valuation setup.
Okay.
So in the strike valuation setup, we are combining the valuation chart, which is at the bottom, with the momentum chart over here.
Okay.
Because valuations reached -1 standard deviation here. But question is, where did we get the buy signal? And the answer is somewhere around this point. So here the monthly RMI started to give a buy. Okay. If people feel that the monthly is a little late, you can always switch to a weekly chart. So you have the option that you can look for the weekly cycle. You can say, okay, valuations are down. Where is the weekly buy signal coming? And that can become your starting point of making an entry into the stock. Okay. But the monthly cycle is useful because when you're doing long-term investing, you only want those 2-3 important points. Like here it went into a buy, then it was sideways. Yeah. Then here it again gave a buy and again you had a new cycle. So you only want to pick this cycle versus in a weekly you'll be getting buy, sell multiple times at each stage of the up move. Okay. But to understand the overall move, the monthly is a...
monthly that you're looking at around 6 months to a year?
More than that. I mean,
2 years?
Yeah, 2 years. Yes, right. 2 years would make sense. So that's where it's really for investors. If you're going to the monthly chart and looking at this, then you're really...
Real HNIs.
Yeah.
Ultra NIs. Yeah. That's what they're looking for.
That's what they're looking for.
Amazing tool.
So you can even in fact spot divergences. So I'll show you something.
Let us see a divergence.
Yeah. People hardly think that you can have divergences in valuation. So, and I saw this in Maruti's, which is why I'm picking up this chart. And see, people should also notice that here there are various valuation metrics. They can plot anything they want, but automatically it plots what is preferred. Now, this is given to us by the fundamental analysts that if Maruti is in X sector, you should look at EV by EBITDA. If I open a banking stock,
Yeah.
it will go by NII by so and so.
Okay.
You know,
Okay.
or it will go by price by book.
Yeah.
So automatically there's a preferred valuation metric for that particular sector.
Okay.
And that has been, mentioned here. It's also given that which is the valuation metric.
The industry looks at that valuation.
Looks at that valuation. So it says recommended over here.
Okay.
And the recommended P ratio is essentially what you look for this particular sector, and it's chosen by default. But if you want something else, you have a choice.
Okay.
Now, when we look at only this valuation, you will think, oh, Maruti's valuation is falling. It means the stock must have crashed.
Yeah.
Now you're looking for divergences.
Yes.
So when we look at charts and we go to the strike valuation setup for Maruti, we actually see something very, very different. What we end up seeing is that when these valuations were coming down, as we just discussed, prices are going up.
Yeah. People saw value.
Huh?
People saw value.
There's another angle to it. It is not fully priced maybe.
Yeah.
So there are two ways to look at it. One, some people may say, maybe people are scared of buying the stock.
Yeah.
The opposite could be, maybe it is growing, but it is lagging behind.
Yeah.
The price action is lagging behind. So price is not fully evaluating its growth rate.
Yeah.
Now, you may further verify by seeing whether earnings have grown over the last 4 years. And if earnings have grown, which is sort of what the valuation says, right? Prices up, valuations are down, which means earnings grew.
Yeah.
Otherwise, the valuation wouldn't come down in a rising price.
Yeah.
That means the market is not appreciating the growth.
Yeah.
There you are.
There you are. Absolutely.
So why not this stock? And then to time it, you will go and look at the momentum indicator.
Yeah.
Where do you get the next buy signal? So you may choose a lower. So in this case, of course, you're seeing some whipsawing in the momentum because prices have been very jagged. You might choose to go with a lower time frame. You may choose a weekly time frame, and you will get multiple entry points along the way as it has continued to move up. So it surely tells you something. When you see a divergence, it could be a positive divergence, it could be a negative divergence.
Yes.
Anyone who studied technicals understands that, as you do, that divergence is telling you even something about the fundamentals of the company. So
I never expected this from fundamentals, honestly.
Yeah, people
In
just
the chartist, I only focused on the charts, but divergence in fundamentals, amazing.
And we started to see it once we plotted it. So it was just my idea that we should plot it, and it should be in a user-friendly way where I can zoom in, zoom out.
Yeah.
So first we just plotted the chart. Then we said, let's push this into TradingView and let's get a scannable chart with momentum and see what happens. And then we started to see divergences.
Yeah.
And sometimes you may get a divergence where earnings are not growing and valuations are going up and price is flat.
Yeah.
It tells you that this is overvalued.
Yeah. Interesting, very interesting.
Now, how do we take advantage of something like this? Now, I have found two stocks by searching one by one. The next stage, what we are going to do, and it's already ready, we'll be deploying it by maybe in a month or so, that I will want to scan which stocks are at -2 standard deviations.
Okay.
And showing a positive.
Can we see that in this?
Not yet.
But it's coming.
Yeah, it's coming. We have it offline, but in our backend development, but I'm not putting it out here. But it's ready.
There'll be extreme valuation downside.
Yes.
Looking for a possible buy signal.
Yes. So that will make work even easier. It's not that I have to open every chart and check where is it on the valuation. I can just say, okay, these are the most overvalued stocks.
Okay.
Now let's just study these. Okay. Why should I go and study everything?
Yeah, exactly.
Reduce your work even more.
If you get a technical buy signal, then that's the place you have.
All the more.
Or the sell signal, we work for it. Very good. Anything else you got here?
Yeah. So now here is another interesting tool I will go to. This one tries to and attempts to find either stocks or sectors that are showing strength relative to the market. Okay. I've clicked on something that we call heat maps.
Okay.
Heat maps in most websites are typically what you do is what are the major gainers and losers. What is just that?
Typically that's it.
But this is something that I used to do in Metastock long back when I was asked for finding stocks that we could deploy money on. Where's the momentum coming? So I used to actually try to find the strength of stocks between tops and bottoms in the market. So if the market fell over 3 weeks from year to year, top to bottom, I'll say, okay, within this time period, which were the stocks that fell the least?
Minimum pain.
Okay.
Okay.
Those might outperform on the way up.
Yes, correct.
Okay, so that's a sort of relative strength. And I said, why can't we do that in instead of just a heat map? Can I have a custom heat map?
Yeah.
So then we pick every day. Like for example, we've just had a correction from the 15th of May to I think almost this week till this Thursday, markets were down.
Yeah.
Now, if I put in that what was the behavior, okay, so let's just put this in, and I'm looking at indices, okay, so we'll figure out which sectors did the best during this time period from 15th of May, where the market started to fall, all the way to the 5th of June,
Okay.
okay, before the policy, or let's say 4th of June, okay, so let's say 15th to 4th, even better, okay, and I apply. Now I've applied a custom test of what is the performance. Now here it's come. The performance shows that the reality index did the best, and this is 2 days ago, okay, before even the run up now.
Yeah.
I've put in the 4th of June as a date. So reality was on top, followed by PSU banks, followed by small caps.
Yeah.
So these are the top three. I can keep going down a lot. Now these are all mid and small cap, but down the line somewhere here there's an MNC and then there's energy. Let's just stick to these top three: reality, PSU, small cap. Now what this means is that possibly on a 1 month or 2 month basis, as the market continues to go up, these are the sectors that are going to outperform.
Yeah.
This is where my money should
Because
go.
they've fallen least.
Yeah,
They're
because they've
basically
fallen.
strong.
Yeah,
They're basically strong.
And we can backtest this. Like people saw a very strong PSU rally in 2023-24 between October and I think the election.
Yeah.
Now you say could have known whether there was a strong PSU rally coming. The simple answer is from I think somewhere in September to October there was a correction, right? So in Nifty, if we just go back and test. So we look at a chart of Nifty, we find that it corrected, and I'm going really back now, I'm going here. So here there was a correction starting from 15th of September all the way to 26th of October. Okay, so we go to the heat maps. We put in a custom date. Right, we are going all the way back to 23. Yeah, so what we are trying to do is look at the movement from the 15th to the 23rd of 2023, September and October, right? That is when the market fell.
Okay.
The question is, during that fall, which were the best performing sectors? So we're going to get that result now. Okay. See right at the top, it's CPSE and PSE. They're up only by 1%.
Yeah.
Okay. But it shows that over that 1.5 month period, these sectors fell the least.
Relatively, they were better off.
They were better off.
Okay.
In the next 6 months, they were the best performing sectors. Yeah. Significant returns. So, and I've tried this theory again and again. This is just one example. Even post-election, every time there's a correction, there's a rally, just set this up and see what is working. And you'll find that, in the subsequent...
Can we do this even on the Nifty 50 stocks?
Yes.
Let's try that.
So, so it is... So,
before you want to say something? You want to say something before this?
Yeah, so what I was thinking is we can also try, one more thing is entire fall. See, right now I've taken short-term sell-off from year to year.
Okay.
Now someone might say, okay, what about this entire bear market? So let's do this also and leave people with something interesting.
Okay.
So 27th of September, stock market topped out. And 7th of April, it bottomed out. Okay, now let's take this entire period. I have also not done this test myself.
Okay.
So it will be a new result for me. Okay. Now we go back to September. So 27th of September. And we go to 25. So here it is 27th April to 27th September to 7th of April. Top performing sector is reality.
Yeah.
Followed by metals, followed by private banks.
Yeah.
Okay, and financials.
Yeah.
So this is sort of now we have a picture that what has worked best is metals, reality, and financials.
That's true.
And possibly that is going to do well now. This should be a slightly longer time horizon,
Yeah.
like over 1 year maybe or 6 months, because this is a 7-8 month fall.
Yeah.
A slightly longer term. See, this is refreshed. Okay, so we have now a more accurate picture. I think that was not the final output. So this is the final output. Financials, this is a bank.
Nifty.
Followed by healthcare. Now that is a surprise to me. So it's actually financials and healthcare showing up right at the top of the list. Yeah. And then followed somewhere here by infrastructure.
Okay, when you say financials now, so actually the policy came in after that?
Yes. Yes, the policies come now.
Yeah.
So financials are going to be the best performing sector of the next 1 year. already based on the fall. So imagine that in the fall,
Yeah.
this sector did not go down as much as others.
Exactly.
And it's going to lead the way.
We say that because of policies going up. Actually, no. Actually, no.
Actually, no. That is, the news has followed the market. Market
Yes.
was already smart in advance.
Correct.
So,
Correct. Can we do this on Nifty 50? Can you show it me?
yes, so we can do that. But I have to choose a time period.
Okay, time from. You can choose this same time frame.
Okay, so same time period. Okay.
Yeah.
So the result is already there. See, for each sector, moment I click on any sector.
Yeah.
So I have Nifty 50 here. Moment I click on the sector, the stocks
Just
within the
changes.
sector are already here.
Yeah.
It automatically shows me the results. So the best stock within the Nifty 50 was actually Bajaj Finance.
It was.
Followed by Kotak
It was
Bank.
Bajaj Finance. Yeah. It was Bajaj Finance.
So it's actually more
What are the
financial.
color codes here?
So the color codes are based on how much it went up. Dark green meaning, so it's up here. So it's more than 5%.
Okay.
Okay, 2 to 5% is a slightly light green. And then it goes into red and dark red.
Okay.
So you can actually do something like, you want to only see those stocks which are in the top
Yeah.
bracket. You can choose those and it will only show you those.
Just these two stocks.
Yeah.
Good enough. And basically, we're looking for just 1 or 2 or 3 stocks. That's it.
Yes, yes.
Very good. Interesting. Amazing. Interesting. What else like to show me?
Yeah.
No.
Yeah.
I want to intraday time frame about this multi time frame.
So far what we have done is we are down to hourly chart
Hourly.
on all the scans and the RMI scanners. We will be introducing somewhere after the 15th of June, the minute charts will go live.
Okay.
Okay, so we'll have 1 minute live charts. Then it will be possible for you to actually look at RMI even on a minute chart and find the buy and sell signals.
So what will be the duration of trade when you take a looking at minute chart?
So if you're doing a minute chart, see, you'll have to find a combination that works for you. I know some people who are, doing a 15-minute and a 5-minute kind of combination.
Yeah.
So possibly that can work. So each trader has to decide, okay, this is what works for me. Because the time frame I choose, I think the actual outcome is like, say, when we choose hourly, the cycle lasts for around 3 to 4 days.
Good enough.
So if I choose 5 minutes, it's going to last for maybe several hours.
Several hours. Good.
Yeah. So you have to really, based on that, you have to choose what.
So which are the time frames you normally use for intraday?
So I personally, I don't do intraday trading. Okay. So that is a personal choice that people make. I find taking positional trades much more useful, and also peace of mind that, I can sleep over it.
Yeah.
It lasts for 2-3 weeks. I have a trailing stop loss. So usually based on daily charts, which I can actually track without being too involved in the tick by tick movement, because that's a little stressful, I find. But if somebody likes to do that, then he'll have to choose lower time.
So basically, weekly and daily should be good enough?
Weekly and daily are good enough.
Or a monthly and daily? What?
So monthly is a higher. So if you have a very long list of stocks in the daily weekly combination, then monthly will be an additional filter to really bring out what I want to see.
That should be good. That should last around 10 days, 12 days,
Yes.
3 to 5 days, 12 days.
Yeah.
Good enough. Very good.
Yeah.
Okay, Rohit. I liked your software. Loved it. Few things I must tell you, which was a bit the sentiment indicators, the broader market movement, that's helped me in turning points, plus your RMI.
Yeah. So just to put it in process, what this is what I spend my day doing. Okay.
Yeah.
Decide whether the market is what direction it's going. Scan for stocks, what I have to really get into. The sentiment indicators give me the confidence that yes, I should be bullish from here, I should be bearish from here, and I should stay with that direction.
Okay.
And then every day it's the scanning process, using the RMI scanner, finding stocks that are best buys and executing.
Yeah.
So it becomes so process driven.
Yeah.
And this is my process. The system allows you to build your own process. You can choose what you want. You want to do it this way, you do it this way, you want to do it that way. You can evolve your process around it. And but be process driven, because that is what finally gives you results.
Okay.
You have to have an execution. So decision making, what is the market direction, process of finding the right stocks, and then actual execution.
Yeah.
So even as we looked at heat maps, essentially we end up with a list of stocks or sectors that we like, but execution is back to the RMI.
Yeah.
I need to know whether I'm getting a buy signal or not. And then I need to trail my stop loss with a moving average or a simple higher high, higher low kind of concept. And I have to do that every day. So what I tell people is just get process oriented. The tool is here.
Yeah.
It makes it very simple. It's so obvious that it should be a no-brainer for anybody.
Yeah.
They just have to get started.
So basically, find the direction, looking at trending. Once you know the direction, scan the stocks, minimum pay in the heat map, and the RMI for execution.
Yes.
And you also said you execute the trade personally between 3 and 3:15 or 3:30.
3:15 and 3:30.
3:30.
Yes. Because I don't want to miss out on the overnight action.
That's an amazing thing.
Yes.
But this is the only way, or during the day also someone can do?
No, definitely you can. So if you are, say for example, you are an intraday trader.
Yeah.
We will be putting 1 minute data into the feed.
I was coming to that.
Yeah. We will be putting 1 minute data into the feed. By the 15th of June, it will go live.
Yeah.
And once you have 1 minute data, you can come up with intraday combinations. Even if you are using hourly chart buy-sell signals, you can take action much before the end of the day. But then remember that your time frame is not more than a couple of days on an hourly chart, because one RMI cycle, which we call from buy signal and then back to zero, typically takes a few days to complete.
Okay.
So depending on the time horizon. So intraday trader means you can't do only hourly, you'll have to go to a lower time frame. It may be a 5 minute and 15 minute combination. So if you combine the 5 minute RMI and 15 minute RMI, you may be able to find trades which conclude within the day from long to short.
Yeah.
And that's what people need to really do then.
One last question. Now tell me, how can one access this application of yours?
So all they need to do is go to web.strike.money.
Come back again.
Web.strike.money.
Web.strike.money. Okay.
Yeah, that's where the application is. The website is strike.money. Even if they go there and click, they will come to web.strike.money. So from strike.money to web.strike.money. On web.strike.money, when you actually register, you automatically get a 7-day trial. But for everybody who is watching
this
today,
we have what's the offer?
Yeah, the special offer is 30 days trial.
Wow.
Okay. But they need to use the link which is in your description.
Okay.
And they'll get the 30-day time to actually use it and enjoy it and get used to it.
I certainly will do it. I certainly will do it.
Yeah. So I'll urge everyone to try it out. It's an open offer because I think there should be no looking back. I don't understand any reason after everything we've looked at why people should not be building a process around these tools and indicators to really execute every day.
Actually, it makes it very easy, I'll tell you.
Yeah.
The process that you explained makes it very easy. It's a matter of just execution.
Yes.
And clicking on the link below to do it.
Yes.
I'm going to do it. So viewers, if you want this software, you want to try this software, I would do that. There's a link below here, description. It's pinned out there. Click on the link and you may get it. And thank you very much, Rohit.
Thank you.
Pleasure.
It's been such a pleasure.
Amazing interaction with you.
Thanks a lot.
With a fellow professional trader. It's been a very, very long time. I've known you for a very long time. Pleasure meeting you once again.
Pleasure is mine. Thank you.
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।